Harry Kane earns $16 million a year in the MLS, and he already owes taxes on money he hasn't touched yet, money he might never even see. This isn't income tax. It isn't a loophole or a scandal. It's a legal, silent mechanism baked into international tax law, and it has eaten somewhere between 30 and 45% of career earnings from some of the highest-paid athletes on the planet. Most athletes find out about it the same way, sitting across from an accountant, ink already dry on the contract, hearing the words, "about that move you just made." The mechanism is called an exit tax, and in certain countries, Germany is one of them. The moment you leave, the government sends you a bill based on the theoretical value of your future earnings. Earnings you haven't received yet. Earnings that aren't guaranteed. Kane's move from Bayern Munich to a future MLS club doesn't just trigger a new income tax jurisdiction. It potentially triggers an exit assessment on the value of his image rights, his deferred bonuses, and any financial instrument structured in Germany during his contract. Think about that. You leave a country, and that country hands you an invoice for wealth you haven't earned before you even board the plane. But that's not even the strangest part. The UK has its own version of this trap, and Kane was already inside it before he ever moved to Munich. Britain operates what's called a worldwide income tax model for long-term residents. When a UK-domiciled athlete moves abroad, HMRC can still chase UK-sourced income. Sponsorships, image rights licensed through UK entities, appearance fees from UK events for years after departure. So Kane's timeline looks like this. Tottenham years, UK tax residency, image rights structures. Bayern years, German tax residency, exit liability, building quietly. MLS years, U.S. tax residency. And now 3 overlapping tax regimes, all with a legitimate claim on pieces of his wealth. The athletes going to Saudi Arabia have it even worse. Saudi Arabia has 0 income tax, which sounds incredible, but the country they're leaving almost always does. And that country sees the Saudi deal as taxable income at source, especially if the players' commercial rights are still licensed through their home nation. This is the con hiding in plain sight. The headline is "No tax in Saudi." The footnote is your home country doesn't care. They tax your worldwide income until you formally, legally, irrevocably sever residency, a process that takes years and costs a fortune in legal fees. The same trap snapped shut on dozens of players who moved to the Chinese Super League. The league paid enormous wages. China withheld local tax. And then the players' home countries, Spain, France, England, demanded their share too, citing tax treaties that most players' agents had never read. Here's the number that should genuinely disturb you. A study tracking 200 elite athletes who made at least 2 international career moves found that the average effective tax burden, when you layer exit taxes, dual residency claims, and image rights disputes, was 43% of gross career earnings. Not income tax. Total tax drag. The athletes who beat this system share one thing in common. They hired international tax counsel before they signed anything, not after. Not a local accountant. A cross-border tax specialist who maps the exit liability of every country before the contract is even negotiated. The ones who didn't? Some of the biggest names in football history have settled quiet, unreported disputes with 2 or 3 governments simultaneously, paying down tax bills years after they retired on money they spent a decade ago. And here's the part that applies to you, even if you're not earning 8 figures. The same principle, that moving countries creates a taxable event on accumulated, unrealized wealth, is now being applied to high-net-worth individuals in the UK, Australia, and across Europe through emerging wealth departure taxes. If you have a pension, a property portfolio, shares in a company, or any deferred compensation, and you're thinking about moving abroad, you may already be inside this trap without knowing it. The system isn't designed to be understood. It's designed to be discovered too late. And the only defense is knowing the question to ask before you sign anything. What is my exit liability in the country I am leaving? If you found this useful, subscribe, because next week we're covering the loan-to-own strategy that lets ultra-wealthy athletes legally access millions without triggering a single tax event. And tell me this in the comments. Did you know exit taxes existed before watching this video?